Now here is Kusum Ramachandran and Komal Mittal from the offices of Manjit Singh CPA PC with some tax advice for you.
Good morning, viewers. This is Komal Mittal from the accounting firm of Manjit Singh CPA in Falls Church, Virginia, and with me is Kusum Ramachandran. Hi, Kusum.
Hi, Komal.
Let us talk about the pros and cons of making an S election. A lot of people like to structure their businesses to form an LLC or a corporation. Now, would you like to throw some light on whether or not they should make an S election?
Certainly. That's a very relevant question for the times, and especially during these recessionary times, a lot of people are incorporating their own businesses, are forming LLCs so that they have some structure to any business that they may want to run. And an essential part of that is the decision whether or not to make an S corporation election. The predominant difference between an S corporation and just having a one-member LLC, which would be like a sole proprietorship, is the ability to pay payroll taxes on the amount of income that you would designate as wages and therefore active income. And recently there have been a few cases out of tax court where the service has won over the taxpayer in terms of the amount that the taxpayer has claimed as compensation. And compensation is a very loosely defined term. And so more and more you feel like if you don't have profits in excess of, let's say, today $100,000, it may probably not even be worth your while to make an S election because the paperwork filing requirements are different. The record keeping, it has to be more structured, and especially for a taxpayer who's not very organized, not good at record keeping, just making the S election is not going to bring too much added benefit. If he's not going to, if all he has in terms of profit is, let's say, $50,000, it would really behoove him to take all the $50,000 as compensation so that and pay payroll taxes on it, so that there's no real added benefit in terms of avoiding paying payroll taxes on some or any of the profit. That's one of the major differences.
Now, is there a definition for reasonable compensation?
Reasonable compensation, there really isn't a very clearly defined definition of it. It would be what your peers would make given the same job. In other words, if you were a programmer and that worked for yourself as opposed to a programmer that worked for a corporation.
Like a fair market salary.
That would be correct. That would be a fair definition. Don't get me wrong, an S corporation does bring a lot of other benefits, the ability to sort of keep your accounts separate and have a neatly structured pension plan where you can have an SEP, and these days the UniCase or the solo 401k plans are very popular. But if you are a one-member LLC and you don't make an S election, by default, you would be a sole proprietorship and you would file Schedule C. Now, over there, if you have children who help you in the business who are under the age of 18 years, then you would be able to pay them compensation without having to pay. You would give them a W-2, but you wouldn't have to deduct FICA taxes. You would just deduct federal and state taxes. So that gives you some leeway if you're a sole proprietorship in the sense, and then the administrative requirements for a sole proprietorship are very much simpler than they would be for any corporate structure. So that's something to think about. And there's only a single tax return to be filed. There's a 1040 and your Schedule C. Whereas if you make an S election, your administrative costs are higher because you have to have an 1120S and bring that income over, although there's no double taxation, which is an important benefit of making the S election, as opposed to keeping an entity as a C corporation.
Thank you so much, Kusum. That has really shed a lot of light on the topic of forming and making an S election. Thank you so much for being with us this morning. We'll see you next week.
I hope that you've enjoyed the information that we have provided. We'll see you again next week. Goodbye.